Good morning, guys. It's Goose from the Wise Wealth Discord coming back at you with another. It's not quite Sunday, but Monday morning watch list. We are going to overview some of the indexes and some individual stocks and equities, see what levels we're liking, what levels we're not, if we are on the sell side. We'll start off with SPY per usual. As you can see, just the overall view of the daily, we are up a tremendous amount since that October 23 correction. About 26% gain in the SPY. Q since their break, I think, is a little bit higher, if I'm not mistaken. 30%. So these are pretty astronomical amount of gains in less than a year. October of next year or of this year will be the year mark from these bottoms, these previous bottoms. So, with that being said, obviously there is some bearish divergence up here. You can see on the daily, you're creating lower highs, lower highs, lower highs. So it's basically just signaling that there is, weakness coming or a possible change in trend. And as Jimmy and I have been kind of preaching, is like, don't try and call the top. Like, I know I have a few times in my Discord, but necessarily you don't want to be like, oh, this is the top, this is the top, because people here were saying this is top, and then people here were saying this is the top, people here were saying this is the top. That's like 5, 6, 7 months of time where they're just top, 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 and it's like you just want to keep riding the trend. Is like if you can go down into the 1 hour and you start to see a solid trend, it's like you could draw your trend line and see that it's obviously bouncing every time. And Jimmy and I have said, I think it's the 9 and 21, if I believe correctly. I was going through some technical analysis. I've been kind of, yeah, right here. No surprise index from yesterday, a little dip. Still holding on to the 9 and 21 EMA daily. Look how well these EMAs have been respected this whole run. Zero reason to turn bullish. So it's like you look at this trend and it just comes and touches it, touches it, touches it, touches it. So when you see that, that's obviously an uptrend, and you don't necessarily want to be calling tops because you're just going to get burned trying to short it. If you don't see, these EMAs be broken down, then there's no reason to turn bearish because it is an uptrend. But that's why I bring that up, is because there obviously has been a significant rise in equities, and at some point the healthy, broad market is going to have to come down and come to reality a little bit. And that's when you get your 5%, 10% pullbacks. And the timing of that is hard, but it's also something you got to keep in your back pocket, is be aware of that. If these levels do start to break, these rising wedges and stuff like that, rising channels, they're steep. So if they do break, then you're going to be looking for the points in which they were consolidating, which, like right here at 478 on SPY, is a decent spot. 500 obviously would be a strong one. There is a gap right there. So if these levels start to break down and it does start to turn bearish, and there is a top in equities and indexes, ETFs, and all that kind of stuff, that's where you could start to turn bearish. And obviously here at Wise Wealth, we'll be giving you the call outs and stuff like that. I know I've been slacking the last few days, or last few weeks, but we're getting back to it. We're getting back to it for sure. We just need to watch these levels, be sure. SPY, it's coming kind of close. This morning in pre-market, we're down almost 0.5%. So we're coming down to the 509 level. Anything broken below 503, 502 can start to fill this 500 area. That's what I'll be watching for, the bounce, obviously somewhere around this trend line. QQQ, same thing. We have a gap below. Price is a little different. 433, 434 area broken down below. There's a huge gap, so this could easily come and test the 430 area by the end of this week. We do have some economic data coming up. I'll show you guys that at the end. I believe Tuesday is CPI. I believe, I can't say for sure. IWM, we've been watching this. I'm going to zoom out a little bit just to show you guys kind of like the broad term action. So we had a beautiful break and retest on this huge level that we're at. I mean, we could be generous and put it up here, that it was in a downtrend and stuff like that. But it had a nice little W shape, and then it was kind of coiling up a little bit. And now it's finally starting to break out. This will be huge for this would be big for interest rate cuts. I know right now they kind of push back some March expectations, and I believe we're heading towards closer to June with that, with those talks. But we'll just see how the economy does and stuff like that, because the Fed is still very data dependent. Some of this data is lagging behind, anyways. But we'll just see. You have that coil action resistance. It breaks through finally, and then it comes back and retests. I'm going to go down. I'm in the daily right now. You can see that it's holding this now as support, which is big because this is a big level to be breaking out. It's finally breaking out of this huge range, and it's made a higher high, came back in. Now it's mounting these higher highs and staying above this previous huge range. I mean, we're talking 2022, almost 2 years ago, where it's finally breaking. So this could be a big move in the upside. IWM could definitely continue to keep going. Like I said, at some point the market will have to show weakness. I mean, that's just, a fact of the matter when it comes to the market. It moves like a rubber band. Too far in either way, it's going to bounce back. So we'll see if it can get over this low liquidity area. Then it's super bullish. It's kind of similar to like what Netflix had. It's just a huge range up top, fell below. Now it's going to see a lot of resistance here. This is bought up, bought up, bought up, bought up, bought up. Then it started to sell off, sold off from that exact point, turned into resistance. If you see what I'm talking about. So right here, there's these levels where it's bought up, loses it, comes back, retests it, and then it can never get above. So now that we're here, it's going to be major, major resistance. But if we do start to break above some of these 210s, 220 areas, all-time highs would most likely be hit. I would say 250 would be my longer term idea on it. I do have some in my 401k, so I've been kind of changing the percentages a little bit, seeing that the indexes are at all-time highs and IWM is down here. I've obviously been putting more percentage towards IWM than I am the QQQ and the SPY right now. That's just personal opinion. I mean, I'm not a financial advisor. Don't take any of this as financial advice, just kind of my opinion. Like to share it, see what other people are thinking. Bitcoin, I don't usually go over it, but we're obviously at all-time highs, something to talk about. We were kind of given the call outs around 38,000. That retest when it came back down. So this is when the spot ETF was announced, came down, came and touched 38,000. What's beautiful to see is the technicals, because as you could see, this was the last liquidity part where it's consolidating. And like it's similar to what I was saying on the Qs and the SPY is like what they want to mount is their previous consolidation points. So you come back to the SPY, go to the 4 hour, and this was a good consolidation right here at the 500 level, and then down here at the 477 level. This is where liquidity would be. So when you do start to see these drops, it's typically where you would find supports on those levels. My bad, I was going in on Bitcoin, kind of lost it on the ticker. So yeah, nothing very concerning. I know it is at all-time highs. People like to short at those points, but as you can see, it's finally breaking above. So if it does come back and retest like the 69, 68 area, I think that's completely healthy. Even the 65 area, somewhere around there. But slight rising wedge just in the daily, maybe the 4 hour a little bit, where it's just kind of very tight range, right, going up. So it's like if that does break down, you can start to see a solid sell off. But it's at all-time highs this morning. We're up 3% at 71,000. Pretty impressive compared to not even a year ago, where I was posting on Instagram like there's 2 bear flags, wouldn't buy yet, but these are the levels you would like to be buying in the long term. And you can just see the meteoric rise since that has happened. So Bitcoin continues to just keep ripping. Got Apple. They're necessarily looking pretty much the weakest. out of some of the Mag 7 Teslas up there as well. Google a little bit more weakness as well. But you could see just kind of the levels that it was struggling with. It was struggling to hold their all-time highs around 200. So potential double top. What we're looking for, since it lost this, range that it had going, it did sell off. I expected, there to be some support here because there were some big levels that were held in the past. So anything below this green level right here is in line in the sand, 165 pretty much, 166. If you lose that, then it has double top formation where it could start to breach lower and lower. We'll see how far it goes. I would say if it did break that 160, 157, somewhere in this area would be a good spot to be cautious. But obviously, there's a lot of downside if things do start to get ugly. But it just kind of seems like if you zoom out, it's still kind of really high up there. So I don't think there's really any cause for concern. It's just Apple. It's a very held stock. But I did have a nice level on it. You could see, maybe it does come and retest this and go up and retest the 180 area, the range in here, or it just keeps going because obviously that daily didn't look too good when I got yesterday and Friday because it came in, showed that gap, and then the gap denial was pretty serious. And still ended up green for the day, but it was like close to 3%, only closed up like 1%. So 2% drop, so it's a little bit of weakness. Microsoft, you still have a beautiful level, still just maintaining range. So it's like anything below 397.50 would be short. Anything above about 416, 420 area, then you could start to look for longs, 430, 440, something around there. But as of right now, just healthy consolidation at all-time highs. Not getting denied too heavily, just either accumulation or distribution going on up here. Just have to wait and see. Nvidia was the one that did make, turn a couple heads on Friday. As you can see, it was down 5.5%, and it is dropping in this morning's pre-market a little bit. And that's the baby. That's kind of been the hauler in this recent run, this meteoric run that we're seeing in the indexes, the ETFs, QQQ, and SPY. Big denial off this major trend line that it started. Obviously, like, this is just a random ass line, so it's like, who knows if algos are picking up on it. But it's always interesting to see the very, very longer term ones in some of these stocks that have been around 10, 20 years, because they start to build definitely something, and it's just getting overstretched. You could see the weekly RSI. RSI is basically just a strength index, and starts to get like that. It's that rubber band effect I'm talking about. When you pull a rubber band too far and it comes back, it usually whips back. So we're at those caution levels, and then you have the weekly, get a little, what do they call it, hammer, a bearish inverse hammer or something like that, because there's hammers on the bottom too. Sometimes you'll see them like something like that. That green hammer right there is like price tested these levels, but buyers quickly bought it up, little consolidation, boom. And it's like, it's the same thing where it's like, it's buyers were all the way up here and then sellers stepped in around these levels where you could see a big wick, a big drop. So that's never really a bullish thing to see something like that when it is super extended. But I can't really, bearish engulfing on the 4 hour, 1 hour. You could start to see how it just started getting a little smoke, breaking some levels. But zoom out, guys. I mean, look at this. This is absolutely a ridiculous run. So until some more things happen, I'm not super bearish, but obviously it's something in the back of my mind that could be coming. Meta, you had the earnings gap and break base, that Jimmy and I always speak of, one of the most well-renowned. It finally broke out. So we'll see if it can maintain. It's down quite a bit, actually. It's 500 level in pre-market. So we'll see what happens. Tesla, one of the weaker names, kind of had something similar to what Jimmy had posted last week. You had the rising wedge, a bearish flag pennant, because it was all the way down from this, and it was just kind of doing a little dead cat bounce. Lost it. So these levels where it's at right now, currently 176.50, you really need to see those hold, and you want to see that bounce. A lot of people started turning bullish off this, and then it just slowly got destroyed. So we'll see. One of the weaker names, just like I was saying, Apple. Apple is looking weak. Tesla's looking weak. But then you look at Nvidia, not really much weakness. Meta, not really much weakness. Microsoft, not much weakness, just consolidation. So the weaker names are Apple and Tesla. So if the market does downturn, I can see those being the biggest droppers. The strongest holders, obviously, Nvidia, Meta, yeah, Microsoft, AMD. AMD has just been an absolute monster, dude. You see this candle right here? It may not look significant, but I'm sure a lot of people made some decent money on that candle. Because it's like you have the consolidation, it's holding, finally breaks above, it just goes. And it's like that's why we're watching these levels. It breaks above, you can see those red candles in the retest, 23%. And we're talking from February 29th to March 8th. So you buy month out options and it's 23%, like you're gonna be golden. But we'll see. It's still just ranging. I know that's big spike up is huge, but you can just kind of invalidate it, say it was a false breakout, still be holding these levels pretty nicely. Oh, but watch out below. If it gets below 196, it could, just continue at 184. Anything above this level right here can obviously go test as 227. But as of right now, that does look kind of bearish, just like a topping type thing, with the daily being bearish engulfing the last 2 days. So some of the strongest names are starting to show some topping patterns, when it comes to Nvidia and AMD, Meta. Meta not as much, but it's always just to keep an eye on which ones maintain strong if it does start to sell off, because when it does come back, Google was the one that I thought seemed weak. We had this huge pattern, rising pattern, and it broke, and now it's retesting that. It was obviously denied entry into that on Friday. So that's another name that I would look for in shorts. If it does get below this 130 area, you could start to see it test maybe the 120 area. And the longer term side of things is that is a daily chart. Amazon just basing. It had a very tight range. It's kind of broken above and found some support there. So we'll see anything broken below 170 to the 167, back in that range. But we're just kind of in the mix, similar to what IWM was. It's not like quite the bottoming process that it had, but just the range when you get back in here. A lot of liquidation here, so I wouldn't be surprised to see more accumulation and distribution on some of those things. Netflix and a rising wedge. We've been on quite a tear. They continue to get upgrades from analysts, and they have Jake Paul, Mike Tyson fight going on there that they're streaming. So there's definitely some bullish catalyst going on. There could be some selling news action. Who knows when, that fight is really leading the stock price to go higher. But I think it's a good thing, honestly, for Netflix to be indulging into some of those popular streams that people like to watch. It gets people on their app. It makes you want to download and subscribe and stay subscribed. And the password sharing, as much as people didn't like it, did help the revenue. The revenue has been exploding, and their subscriber growth is still starting to go up. Because at first, when they lost their first subscriber, people just started selling and selling and selling. And now, they're starting to see there's still hope in the company. They're still um, innovating. They're still getting into new things, video game streams, and stuff like that. So getting something like the Tyson versus Jake Paul fight, I think, is pretty good. And for the long term, obviously still haven't reached all-time highs, but this type of upward movement is just kind of unsustainable. And I could definitely see, stocks do correct for it to be fast and rapid because of how, little support there is. There's a little consolidation around 560, but rising wedge broken, there's a huge gap here, and you got a huge gap down here. So these are concerning levels, obviously, if the ultimate trend starts to break down a little bit more. But until that happens, obviously, like we said, don't stay super bearish. Other than that, Baba, I've been watching. They're still maintaining pretty well. They are green on red day in the U.S. market. So I'm hoping this is some accumulation because I've been trying to buy the dip a little bit. I have close to 100 something shares, 130, 150 shares. So it's a pretty large position in Baba. I'm not sure if I'm just kind of being, dumb about it because I keep averaging in over the course of a couple of years. But my long term horizon is, close to 10 to 15 years to be holding these stocks. So we'll see what happens. But I'm definitely always hoping for the best for Baba and China. That's more political than I need to talk about on here. ARM, just consolidation. They had a huge, obviously a massive run up. And it's crazy because I was trading them right around this fucking break and got rid of them. That's just what day traders do is sell shit too soon. That's why we always preach the long term. SMCI, I mean, nothing really I'm watching. I mean, Snow, it came back in this range after its huge earnings. Um, you could see earnings had happened and it's still continuing to sell off. So we were talking about a potential of it coming back, but when did it start to bounce? And it's starting to show a divergence. So you could see that it's probably easier to see at 1 hour. So right here on the chart, it's creating lower highs, lower lows. It's not breaking above. But then on the RSI, you have right here, it's starting to break a higher high, even at this level. So it was all the way over here where it's showing that it was lower than this point right here. This is obviously lower. So you have that divergence playing out. But as you know, even on the indexes, how long they've been lasting, there's been divergences for days on end. And it just keeps going. So it's like just because you see a divergence doesn't mean that it's guaranteed that it's going to play out. You see right here, boom, higher highs, higher lows. Lower highs, lower lows, lower highs, lower lows. So it's like when that's happening and you're seeing it still extend, that's showing that the trend could be weakening. So it's like when you go back to where to go, we were looking at cyber. Was it snow? Yeah, it was their earnings. So same thing, the divergence is there. It doesn't mean it's guaranteed. I did not do that. Not sure that happened. Oh, whoa, hold on. There it goes. But yeah, divergence is showing, and it's just something to watch for. It's nothing guaranteed, and I just brought back the indexes and ETFs because they've been showing it for a month straight, and it's like it hasn't changed yet, but you do know it's coming, so that's why my caution is up there. But as far as that, I was going to go over the economic news. I have one. Where is it? Forex calendar filter. These. We just want to see the U.S. right now. Obviously, if you're looking at currencies, core CPI Tuesday, Monday we have nothing. We have daylight savings time Sunday. Big news of that. Tuesday core CPI year over year, 10-year bond auction. That's going to be big. The red folders are the ones that affect the market the most. There is yellows like this that are, kind of iffy. Could So we got 30-year bond auction. That'll be big. Core PPI, core retails, sales, PPI month over month, retail sales month over month. Empire State Manufacturing will be big. Prelim, UOM, consumer sentiment. I'm assuming that's just consumer sentiment. That'll be Friday. So right around this area, Tuesday, Wednesday, Thursday could be big zones for the big move. We'll just have to see. A lot of my options were for the 15th. A few weeks ago, I ended up selling out of them. But as you can see, we're still near all-time highs. It's March 15th. But that was kind of like my zone that I wanted to see start to break down a little bit. So that didn't quite happen. I didn't lose any money on most of the positions, but didn't make as much as we could if there was weakness. So we'll just have to wait and see. I'll be giving you guys shout outs throughout the week. I'll get back to it. I know I've been kind of slacking a little bit, but I just needed a quick break, and news is back. Hope you guys had a good weekend.